Yeah, hello, Phill Berry. Teachstone's a central London law practice with about 120 people. Property and property finance is the largest sector in the practice. And the market for short-term finance, mezzanine and secondary finance has always been there, but it's really flourished since the 2008 crisis, when there was a withdrawal of high street banks and foreign banks from the real estate finance sector, particularly with regard to development funding. It's now a very competitive sector with new products and new ideas. So you'll hear reference to challenger banks, fintech, i.e. financial technology, and peer-to-peer lending platforms on the internet. Most lenders in this sector will be granting loans that are not regulated by the Financial Conduct Authority. This means, particularly since the Mortgage Credit Directive order of 2015, that they will mostly be to companies, corporate vehicles, and not to individuals. There are some exemptions where individual loans can be made, such as second charge loans for business purposes.
Well, could you give us an overview of the legal process involved in the grant of a short-term loan?
Sure. Well, to start with, we normally get involved when the lender has come to an agreement in principle or heads of terms with the borrower. Occasionally we'll be asked to get involved in helping you with those that agreement in principle or heads of terms where there's something that needs legal input from the very start. That's followed by us contacting the borrower's solicitors and asking for an undertaking for costs. This is an important part of the process because you as lenders do not want to be responsible for costs, so our costs have to be covered whether or not this loan is going to proceed to completion. We have a standard set of inquiries that we send out, and if there's for instance, a development loan, there'll be additional inquiries involved. So what we expect to see from the borrower's solicitor is replies to those inquiries and a full set of documentation. And by that I mean a full disclosure of title, up-to-date local and other searches, and evidence of occupation. Also any other documents which might be pertinent to the transaction. We also look for documentation regarding KYC, know your client. We would always try and find a paper trail from the property owner to the ultimate beneficial owner, because that might of course involve offshore companies, trusts, or other interposed vehicles. However, for the lender, it's up to the lender to decide exactly what information it needs, because it'd be subject to its own internal and industry standards. When we've got the requested undertaking, we'll start to look at the property and other papers, and we'll also start to draft the loan documentation. We use documentation which we've had approved by the lender in principle, although of course they change from transaction to transaction. It's important that the documents are tailored for the transaction and fit for purpose. In this market, short-term financing, borrowers do not expect their lawyers to have to look through 100 pages plus of documentation.